Hey, Eamon, how are you?
I'm doing wonderful. And yourself, Wali?
This podcast, we've been trying to have this for several years, I would say. I think last 2 years since I've met you for the first time in Sarwa event and then the second event as well. And we've been saying, touching base with each other on LinkedIn, on messages, DMs, but we were not able to gather this time. And it was very easy just sitting together and having good time. The last a conversation that I had with you before this podcast, like for 1 hour, I said that if we were able to record that, that would be another podcast because that was really spontaneous. So for anyone who's new and doesn't know Eamon on my channel, if you are on LinkedIn and following me, then definitely you know Eamon. He's from Sarwa. I'll ask Eamon to introduce himself first, and then we'll go ahead.
The pleasure to be with you today, Wali. And then honestly, it's long overdue. I've been following you for a number of years as well, too. I have a great affinity and a great appreciation for the work that you do because financial literacy is near and dear to me. A little bit about myself for those who haven't had who I have not had the chance of ever speaking to, or maybe being in your feeds. My name is Eamon Gebre. I'm the VP of Advisory and Investments here at Sarwa. I've been in the financial services space for well over 20 years. I got into banking at a very early age, at the age of 18 as a uni student, and kind of progressively worked through the banking system to become a senior financial advisor when I was at a TD Canada Trust in my hometown of Toronto, Ontario, and even at HSBC here in the region, where I was a Premier Wealth Relationship Manager. Just over 5.5 years ago, I joined Sarwa at the helm of their advisory department to essentially kind of, I would say scale, our proposition of democratizing, investments for every individual here. And I've been here for the last 5.5 years, enjoyed every minute of it, and I get a chance to interact with individuals like yourself, Wali, along the journey. So it's been brilliant.
Awesome, awesome. Actually, it's the same time period that I've been investing with Sarva as well. I think it's been 5 years now that I've been investing with, and I'm really happy that I've used Sarva because before that as well I've used several other platforms. But when the investor is starting up and they get into wrong platforms, it's just the end of the story. Because I have been through that. I've been through some CFD platforms that nobody should be starting their journey with. They should be doing very simple things, a very commonsensical things, which is nowadays uncommon. So, as a VP, we will be discussing a lot of things in this podcast, especially about alternate investment strategies which not for which might not be for everyone, but because I want myself to be educated about certain things like options trading and what are those technical terms that are associated with it. And I've seen your content and I think Michael's content as well about this options, buying puts and calls. So I was really interested to see what exactly is this, because I know a bit about leverage trading and these things, but those things I won't, as always, don't recommend to people who are starting up, or let's say audience of my own channel who is just not familiar with this. So it is important to understand, and it is important to know everything about investing, because a while back somebody was asking me how to invest in gold, and I told them to invest through ETF. That is the best way to invest, and I've asked them to open the account with Sarva and you can start investing with ETF. But somebody in his office told him not to go with this route because he was conned, I would say conned, with these kind of apps. Now they are keeping all kind of apps in one, let's say, they're calling Sarva and other platforms which are doing leverage trading in one go. So let's say if somebody is doing leverage trading, of course they will be wiped out in case the market goes up and down. So they were thinking of the same and on the same trajectory. So that is why it is really important to understand all the platforms, what they are offering, and what is good for you and what is not good for you. So that is why I will be asking about certain things here in this podcast. But before that, because you are VP advisory in Sarva, I would like to know what kind of people that you are dealing with on daily basis, and what kind of problems they are coming up with. Because that would be interesting for me to learn. Because you would be dealing with people who are having a lot of money, and also people with having, let's say, starting with $1,000, $10,000, something like that. So, what are the trends that you have seen in last 5 years of being in Sarva, and recently after the aftermath of whatever is happening in last 1.5 years because of these regional instabilities?
Thank you, Wali. Brilliant question, and then I mean, it's gonna be very deep. We can go to different layers, but if I had to kind of describe it, so with Sarwa, we cater to a wide array of investor, I would say, appetites. And what I mean by that is that there's individuals who might be at the very beginning of their financial, journey. Young individuals. You have those who might be at the midway point, and those who are also at the latter stage. And that doesn't necessarily mean that they are also their financial literacy is at the equivalent to the level of being at the beginning of their financial journey or the middle of the or latter parts of financial journey. And what I mean by that is, even though we have a wide array of different types of customers, different goals, different objectives, different investment experiences, and different, I would say, investment strategies at play, I find one commonality, and that's financial literacy. And this is something that, despite the fact that I've been in the industry for 20 plus years, I still can't fathom why that financial literacy isn't taught in schools. Regardless of whether primary school, high school, university, even those who studied finance or accounting or any industries that relate to money, financial literacy is one of those things that, as a commonality, I think we don't get enough exposure to. We're in the UAE, the place arguably has the highest representation of different nationalities. In just as much as the experience that I had in Canada working with individuals who are looking to get onto the investment ladder, I find a similar conversation here where it's like, I make money, pretty good at savings. I don't know how to make my money work as hard as possible for me. And as we see it right now in the UAE, if you compare it to other markets around the world, only 5% of the UAE population, and it's the statistics that have been kind of shared around from many different, I would say, research houses, is that only 5% of the UAE population has their money in productive assets, such as specifically the stock market itself. So there is a long way to go from a I would say, penetration and also from a financial literacy perspective.
So,
And why is
are you saying that only 5% of the people are investing in the stocks in the UAE overall?
5%? It's been studied
Wow.
5% of the UAE market is participating in long-term investments in stock markets itself. This region
While in the
primarily
US, it's around 30 to 40%, I think. It's way higher.
upwards of 50% if you start factoring in the 401ks that individuals have. It's a
Yeah,
much
yeah,
higher
yeah.
percentage. There's almost like
Yeah,
a
yeah, yeah.
forced adoption there where
Yes, yes,
even
yes,
if
yes.
you're not yourself doing it, your employer is doing it on your behalf and they're helping you benefit from the compounding growth. So I would say that's a commonality. Now, I mentioned before about there's different interests. So we have clients who are more into self-directed trading. And this means individuals who want to be behind the driver's wheel and pick and choose the investment strategy they want to deploy, the investment securities that they want to buy, and that can range anywhere from stocks, ETFs, commodity trackers. It could also be cryptocurrency. And these are individuals essentially, and options, you mentioned options as well too. This is a growing demand now that we're seeing, is that these are individuals who enjoy being in a decision-making capability of how to build their portfolio or what strategy they want to deploy. Then you also have another category of individuals who have recognized that they either don't have the time, they don't have the mental capacity, or maybe they just don't have the inclination to manage their portfolio. They'd rather spend this additional time with their families, focused on their hobbies, focused on life. And I would also add, they also recognize that maybe they're still, subject to their own biases that might impact their investment making decision. So they'd rather essentially have a managed portfolio that we look after for them that is essentially following the best practices of how to grow your wealth in a sustainable way. So I would say there's two different camps as far as how individuals try to make their wealth grow through Sarwa.
So, is there anything, because I know I've been using Sarva for a long time now. So, is there anything out of the app itself? Like you guys have Sarva Invest Portfolio, which is truly automated. So, are you guys also helping out some people completely privately, separate to the track of the app itself?
Well, I mean, I would say from them, do you mean like from a product menu perspective, or do you
Yeah.
mean just as far as activities that we do with clients?
No, like let's say if there is a very high net individual, let's say he's coming up with $1 million, would he still be investing in Sarva Invest himself, like normal people do?
Absolutely, absolutely. So
Ah,
these
okay,
Sarwa
okay.
invest portfolios, I would say, are all encompassing because they do cater to the individual goals that they would have. Irrespective of whether it's $1,000 or $1 million, the strategy is still sound that it looks after individuals to help them achieve their financial goals. So yes, absolutely, we have clients who have $1 million plus who are in the same model
Wow.
portfolios
Okay.
as an
Okay.
individual who have $1,000. Now, saying that, there are individuals who also have an appetite to diversify further, and these are individuals who already have their baseline kind of on the go. So they have their Sarwa Invest portfolios. They might have a few stock picks on their Sarwa Trade, but they want to diversify further. And one very popular avenue is through alternative assets. And these alternative assets, essentially, I'm talking about private markets. So we're talking about private equity, private infrastructure. These are assets that clients can qualify to be able to enter into those investments. They're quite different in behavior and I would say, just in experience from your typical, I would say publicly listed stock itself. There is a regulatory requirement that this needs to be a professional investor, and they deem that professional investor as someone who has a net worth of $1 million or greater, and also has the financial acumen to understand how these instruments work. So they are, I wouldn't say riskier investments, but they are more exclusive investments because of the fact that they don't have certain, I would say, traits that a publicly listed stock would have. One thing being liquidity, right? Right now, as we see right now with any of our Sarwa Invest or Sarwa Trade clients, at the click of a button, you sell your asset, you have the liquidity within a matter of days. Whereas with these private investments, the liquidity, there's typically windows in which you are able to liquidate, and there's a liquidation period that happens with it, and that's not ideal for everyone.
100%. And by the way, before we go ahead, I'll just mention something from the last 1 year, because I've graduated from Sarwa Invest. I'm doing it myself as well. So since 1 year, I've not added any funds into Sarwa Invest for since April, actually last year, since April. Now, very interestingly, because now that I have not added any fund, I can benchmark as well. So I was on WhatsApp with Mark, like your CEO. And I told him a good thing that since April, I've mentioned to him, I think in August or last year, I think September, somewhere like that, that the Sarva Invest portfolio, surprisingly, was actually at par with certain ETFs like VT, which is the Total World Index. And that was surprising to me that net of fee, it was still almost the same as the normal ETF that normal people are investing. And again, I have benchmarked to like maybe the last week. Again, the same thing, because I have not added any funds to that. So again, I tried benchmarking that, and I found that it's still not beating, but almost as similar as VT, which is actually it's tracking. So it is really interesting to see that although I'm not having a big portfolio, I've got only $23,000 in the Sarva Invest, and I'm being charged the same fee as 0.85%. But still, I'm at par with whatever if somebody's investing through ETF. And recently, by the way, I was making a video. I mean, because I you know that I create content as well. I was just having a look at the tier level, and the tier levels have changed in Sarva. So now it's I can like it's my I have the option to move away from bonds in Sarva Invest. So I just used that my option and just went to the highest level of risk. And
Okay,
it
okay.
happened the next day, and I didn't understand what, because I forgot that I did that. The next day, when I saw some of the messages, I didn't understand what was happening. But then I realized, okay, they have sold my bonds, and some capital realization was there. And it was, again, as you said, it was really easy and seamless experience. Unlike if it's in private equity, which has more returns, but you are not having the liquidity to do things like that. So yeah,
And it's so
Sarva Invest
challenging.
gives this. Yeah.
Absolutely. And by the way, so what you've just described to me is what we've seen since we started in 2017, Wali, which is your financial literacy is increasing. And that's actually, I would say, like, you've shown that through your journey of starting with Sarwa Invest, and now you've started to kind of pick and choose your own investments through Sarwa Trade, because now your confidence level has increased, your awareness has increased. Sarwa Invest was your avenue to start your investment journey. And you likely paid attention, you watched it. It almost kind of forced you to pay attention to each of the ETFs. And that curiosity kept growing for you to start thinking, oh, what if I purchase this particular ETF or this particular stock? And that's something we've seen since 2017, and also kind of explains as to how our product menu has expanded over the years. If you remember, when we first started at Sarwa, our approach to democratize investing was only Sarwa Invest. A client will approach us, we will ask them a set of questions, we will give them a recommendation, and we will manage that portfolio for you end to end. Now, we have Sarwa Trade, we have Sarwa Crypto, we have Sarwa Save as well too for people who are looking for a place to deposit, liquid savings. The idea is, as our clients' financial literacy has grown over the years, so have I would say, the menu of solutions. So whereas we were just a one product provider, now we're a one-stop shop to be able again to cater to many different clients along the way.
Right. Now, I'll ask you one typical question that somebody can ask you, and actually, I'm doing a webinar on this tomorrow with one of the group, and
You
I
don't rest
actually
there,
am
Wally. You don't
sorry.
rest there. No rest for you at all.
Yeah. So actually, I like this. So the question they're asking for me is, what is the best way to invest? Let's say $1,000, $10,000, and $100,000. And with Sarva, I know that it's a very simple answer. You don't have to worry about a lot. But definitely, you will be getting these questions a lot, and you will get a lot of different people who are asking you the same question. So how are you navigating through this, and how are you advising them to invest? Let's say 1,000, 10,000, and $100,000.
I like to first take a step back personally as an advisor. And actually, my advisory team kind of follows the same methodology as well too, is we want to understand the why. We always appreciate it. Client says, I want to open an account. I want to invest this much money. And, what do you think? It's like, okay, let's take a step back. What's your intention? What is the goal that you're trying to achieve? Why is that goal important to you? What have you done in the past to help you achieve that goal? We want to better understand the context of the goal itself. And the reason why that's so important is investing is a long game, Wali. It's not an overnight process. And if you don't have it already solidified in your mind that the goal that you're trying to achieve or what that goal is, there will be plenty of, I would say, distractions along the way. Just think of it this way. Let's think, in terms of retirement. And for many of us in this region, we're still young enough that we can think about it in 20 years, timeline. A lot can happen in 20 years. And our psychology is not wired in a way where we're programmed for delayed gratification. We more or less think about instant gratification. And what happens, human nature, is that you start your savings, and without a goal in mind, that's something that's near and dear to you, what happens as your portfolio value grows, the ideas of what you can spend it on also increase. It's like, hey, I could buy that really nifty car that I really like. Or I could take an all expenses paid trip all around the world. Nothing wrong with that, of course, if you prepared for it, right? But not at the cost of that really important goal to you. There's certain realities that we all have to come to a conclusion on. At some point in time, we're likely going to be too tired to work. And when we're too tired to work, we have to start thinking about, well, how will I sustain myself? And I think that's a reality for all of our experiences, that at some point in time, we're probably going to retire. I don't want to generalize. Obviously, there's outliers or some individuals who want to work until the day, they no longer can. But the idea is we're going to need income. And that requires patience and working towards that goal to help you sustainably achieve it. So I always like to start with that question is, what's your goal? And let's dissect that goal. Then once we identify what that goal is, then there is parameters that are kind of universal, which is number one, emergency reserves. I can't state how important having your emergency reserves set aside are, Wali. You've been in the region long enough. You've seen what volatility looks like from a job market perspective, from a, I would say, cash flow perspective, just emergencies in general. You've seen what that impact could be. And you don't have to think that far back, where COVID was a very challenging environment for the world, but especially in this region for a number of expats, where you potentially did not have job security. You may have just lost your job at that point in time. If you're an entrepreneur, all of a sudden your revenues have been impacted significantly. For those individuals who did not have cash reserves, their experience during COVID was very different from those that did. I take case in point, I'll never forget conversations that I had with clients who, during the COVID period, lost their jobs, but because they had significant enough emergency reserves set aside, it allowed them to tie them over until a good opportunity came along. Not just the first job opportunity, which could have maybe put them in a position of, taking a lower status job, or a job that was 2 years junior, and that would have impacted their career for many years to come. But it allowed them to have the dry powder to be able to withstand and find the right job opportunity for them. So that was really instrumental. There was a lot of individuals who did not. And I can understand why, because the last significant financial crisis that the world experienced was in 2008. Obviously, we had small, volatility in between, but that was a significant one where we saw values drop by about 50%. The next one was in 2020. So we had a period of 12 to 13 years of just steady progress and growth in the stock market. And that lent to people disregarding emergency reserves. As soon as they receive the income, they're like, I'm going to deploy it into capital markets, or maybe even real estate, or maybe some other asset classes, not leaving any emergency buffer set aside. Well, 2020 was a reality check, because when you needed money, you didn't have it, and the only place that you could obtain it from was the stock market. And what was the stock market doing during that period of time, Wali?
Yeah.
That's a
Yeah.
bad formula. That's a bad formula. So I would say number one, it's understanding the goals. Number two, having your emergency reserves, and then at that point in time, any excess capital that is not earmarked for any short-term expenses that are coming up, deploy that, let it grow, put your money to work, and supplement that with a monthly contribution. Since most of us tend to get paid monthly here, every month you have an opportunity to add towards your goals. So it's a perfect opportunity for you to be able to do a monthly SIP.
So it's the SIP and the regular things that anybody can do, but the thing is, you have to have this kind of mentality and the conviction. That is more important than anything else. And leading to this, there is another question that we were discussing earlier, and I would ask you again that. Like conviction is the only thing I think that is required for the investing, because you might have less money, you might have more money, you might know a lot of technical things, but still you are not able to perform, and you will not be able to grow your wealth. And similar things happen that I've seen with the finance professionals who are well versed in whatever terms that you put towards them. They are doing very well for their own companies that they're working for, but they're not still able to grow their own wealth once it comes to personal finance. So what do you say about that? Because I'm sure you also meet a lot of these kind of people. What differentiate between these people and finance professionals?
Have you ever heard of the term that doctors need doctors as well?
Yeah.
I say that because it is actually an affliction that I find where, even financial advisors themselves do a brilliant job with their clients, but sometimes maybe not so brilliant, with regards to their own portfolios. And the reason being is that they tend to overanalyze, over-justify their decisions that they make. And that's where solutions for example, so for full transparency, irrespective of the fact that I've been in this industry for quite some time, I'm a Sarwa Invest guy, because I acknowledged many years ago that I don't have the capacity, and I also don't have, I would say, the temperament on an individual basis to pick and choose my own stocks and manage them flat out. What has worked for me is the equivalent of Sarwa Invest. So prior to discovering Sarwa and working for Sarwa, I was in your typical mutual fund portfolio that a bank would offer you. And that was very effective in being able to help me start saving towards my retirement. I had already saved about, I'm trying to think, about 7 years in, sufficient enough to be able to pay for my eldest university needs altogether. And it's now working on the second and the third one now. So that has been very effective for me. And when I joined Sarwa Invest is perfect. I have the same model portfolio exercise. Someone is managing it for me. My only job is just to deploy the capital and let the experts manage it. That works for me so well. And I think that's a thing that I think it's important to recognize about finding the right avenue to help you grow your wealth. There's no right or wrong answer. It's just what will maximize, your the benefits for you at the end of the day.
But the notion that you just give the money to finance to professionals and they will work it out for you, it can go wrong as well, because I have seen a lot of people investing in bad products like insurance companies and these things, and that gives them a reality check maybe after a decade. But what good thing is about what is best about Sarwa is that Sarwa Invest, I have learned a lot, because you come to know, okay, this is how they are investing my money, so I can do it, I can replicate it as the same way on Sarwa Trade, let's say. So this is where Sarwa Invest stands out, because we know where Sarwa Invest is investing themselves. So you can change the tier of your own investment platforms. Investing tiers, and then you can see what differences it is making. So that is why knowing as well and learning while you are doing this all is very important. Although it's very boring thing that you're still doing, but at least you should know. That's why I want to talk to you about options. But I'll come to that later on. One
Right.
important thing about Warren Buffett that he is associated with him, that he has made, I think, 20% IRR throughout his life. If you average it out, I don't know how come people think more that they can achieve more than that. If Warren Buffett can only achieve 20% annualized return, then I don't think so there is a possibility that you can make over the long period of time, let's say 20, 30, 40 years. I don't think so people can make that kind of returns. I'm sure people come to you asking for that kind of return, and then you give them the reality check. Is it happening, or people are realistic?
I think by and large, most people are realistic, but from time to time, I will have conversations where individuals are expecting 20, 25% annual returns like clockwork, like with no downtime at all. And I wish that was a reality for the most of us. And sometimes I give an example of, I'm trying to, is a, not ADIO, but the Sovereign Wealth Fund of Abu Dhabi. The name is slipping me right now. It's not ADIO.
Mubadala?
Nah, the other one, the large one, but the most significant. The name is slipping me, but I think our audience probably knows. They publicize what their annual returns are,
Yeah,
on their
yeah, yeah,
website,
yeah,
right?
yeah.
And if you look at it, I mean, you've got probably the brightest minds in the world working there.
Mm, mm,
Considerable resources, whether it be from a knowledge capital or just financial capital aspect of things, and they publicize what their annual returns are. And if anybody goes and checks, it typically hovers between 8 to 10% per annum,
mm,
right?
mm,
This is what we're talking about from a realistic long-term return, or I would say realistic historical returns. If we were to use that as your baseline, is what is considered to be a good return on investment. It's not
mm.
linear. There's going to be some years where you're going to be in the positive territory, and some years you're going to be in the negative. But overall, historically, you're looking at 8 to 10. Our Sarwa portfolios have been in that range as well, too. In some cases, it's been bumped up as of late because the markets have done really well. We're seeing it closer to 11% per annum on our more aggressive portfolios. But this is a typical experience. In the case of Warren Buffett, I don't have Warren Buffett money. I don't have
Mm,
Warren Buffett influence.
mm,
I don't have
mm.
Warren Buffett connections and
Knowledge.
insights
Mm,
and knowledge.
mm. Yeah, yeah.
There is, in every sport, I really use this example, you have your Michael Jordans. You
Mm,
have just these phenomenal characters. I like to shoot around basketball every now and then, and I know, and I have a good day and I have a bad day when my back is not hurting or my knee's not hurting. But the idea is not all of us are Michael Jordans, and there's always going to be a Michael Jordan in whatever sport or whatever field for that may be. Warren Buffett is a classic example of somebody who is passionate about investing, who's also patient. That's a key thing. I mean, he's been investing for considerable decades. Most of his wealth was attributed to the latter half of his investing journey itself. He was just slowly building and building, and that compounding really kicked in at a latter stage in his investment journey itself. So when we see this X amount of billions of dollars that he's worth, most of that was in the latter half of his career. So
100%.
definitely a lot of good things you can take out of Warren Buffett, but let's not hold ourselves to such a high
100%.
standard
Yeah, yeah, yeah.
where we don't have
100%.
billions of
And,
dollars.
and what I mean to say is that if he's making 20%, what makes you think that you can make more than him and consistent over the consistent period of time? So he has his limitation as well. So consistency is the key, because you can make maybe in a month, maybe you can make 20%. But then the next month you might be down 40%. So it's not like consistency is the key here. Here I want to ask you about one thing specifically to the UAE, because now you've seen what we have gone through in last 1 year in general and last 2 months in particular. So a lot of people have apprehension. I mean, there is a negative press, of course, of Dubai, which is not. I don't comprehend that, because I'm living here in the UAE for the last 15 years or 16 years, and I can see things change here in this country, and how protective I've been feeling since I've been living here. But a lot of negative press is there. But in any case, a lot of people who are positive as well still feel like, of course, their wealth is here. If you're an expat, your wealth is here. Especially, let's say, if you're having bank accounts here, if you're having brokerage accounts here, they feel some pressure on them. And people from outside also give them tensions about whatever is happening, and they ask them to transfer the amount here and there, and they make mistakes. So I want to know, let's say, what are the precautions you guys have to safeguard the funds that you have, and also in case of in case of I'm sure there would be no such scenario, but still, in case of some issues in banking system, what is the guarantee you guys are giving for the investors
Yeah,
for their funds?
But I resonate with what you were saying about whether it be outside media or just a portrayal of what life has been over the last couple of months here, which has been I would say very unfair. You've been here, I've been here. My day to day hasn't changed during that period of time of instability at all, and in fact, it's just given me even more confidence in that I would say the government itself has our best interests at heart, and they've done a brilliant job of looking after us and taking care of us. And that's also extended to a lot of the recent, I would say, decisions that the UAE government has made to solidify the financial success of the UAE for many years back. The decision to leave OPEC doesn't happen in a vacuum, irrespective of whether this is something that maybe have been floated years ago. But this has the potential of being a material benefit for this region and for all of us here, really, at the end of the day. So you look at me, I think of it as more of a glass half full situation. I'm excited and optimistic about what the future holds. But I do recognize this has been a moment of instability and it has maybe shaken the confidence. In that case, then you have to ask very poignant questions about your investments, your assets that you have. Number one, regulations. Regulations matter. You and I have been here long enough. I think we've probably stumbled across enough articles about some company doing this and investor, assets have been lost, etc. In each and every time, the case seems to be the same. It's a company purporting to offer you wealth management services, but they don't even have the regulatory oversight to provide you that service in the first place. We and many of our, I would say competitors and I would say colleagues in this space are a regulated entity. And what it means to be a regulated entity is that we essentially have to ensure that the checks and balances are in place to make sure that we protect clients at the end of the day. And it's a very thorough process, and it's not something that you just do once and you get it over with. There's consistent check-ins, consistent follow-up, consistent, I would say, auditing of our day-to-day, and not just about client assets. It could be client information, ways of communicating with our clients, mediums of how we communicate with our clients, our financial accounts. This is very important from a investor safety perspective because you want to ensure that you work with a company that has your best interests at heart and there's a regulatory backstop that should anything go wrong. So we are regulated by the FSRA, that's with ADGM, Abu Dhabi Global Markets. There is structures in place to ensure that clients' assets are always protected, and the key one, the biggest one, is segregation of assets. When you're working with an investment firm, the investment firm is your caretaker, they're the facilitator, but they should not be the holder of your assets. They should definitely not especially hold your assets commingled with their assets, because God forbid the company should go under. It's a very difficult process to segregate, this is Wali's money, this is the company's money. No, there needs to be a very clear segregation of assets. And that's something that it is a default by Sarwa, the segregation of assets. Secondly, custodial services. Where are your assets custodized? Where are they ring fenced? So that if the broker does go down, or maybe the in between brokers, because in our case we work with partners like Saxo Bank, we work with Interactive Brokers, we work with Alpaca. They're the brokers on the back end that power the execution of the trades for our clients. But where are those assets? Where are those shares? They all use custodial structures. In the case of Saxo Bank and Interactive Brokers, they use Citibank as the custodian. In the case of Alpaca, they use BMO Harris Bank. If you're investing in cryptocurrencies through our Sarwa Trade platform, it goes through Alpaca as the broker, but they use Fireblocks as their custodian for digital assets. This is important, and I would say is a necessary piece of the puzzle to ensure the safety of your assets, to know that even if anything happens, never mind to Sarwa, but if anything happens to Saxo Bank, Interactive Brokers, Alpaca, there's a custodian who has my assets. I can recall them at will whenever I need. And that is, I would say, a very important structure, and I would say minimum structure to really take into consideration.
Yeah, I mean, also again, as you mentioned about negativity of Dubai, there has been negativity about different platforms as well. If they're doing very, very well, you will find a lot of people who are not happy with the progress. I have seen this, by the way, because once you guys had this issue of not issue, actually you guys I think you forego your license for DIFC, and I think you remained with ADGM, and I
Yeah.
was bombarded with the messages that see
Yeah.
what happened, because there was a newspaper clip, or let's say there was a publication from the newspaper that you have to liquidate, and the word liquidate was coming. So you can imagine how people were thinking. So then I messaged Mark, and also I emailed several other people. They were saying that this is a very normal thing, and this shouldn't be any kind of flag. But this happens. So I think on top of whatever you've mentioned, you are already regulated with the ADGM as well.
Yeah, no, I mean, so it's funny. So the safety mechanism that we were just talking about being, regulated, because it was misunderstood, some individuals thought this was a warning sign, but this was actually a requirement from the regulator to publicly announce that, hey, Sarwa is leaving the DIFC, and if you have any, assets or anything of that sort, we're making a public announcement. But see, the beautiful thing, so the interesting thing is that we had been working with the DIFC since 2017. And in 2020, we upgraded our license to become full-fledged asset managers. And we had the options. Do we go with DIFC? Do we continue the path and upgrade our license through them? Or do we speak to this up-and-coming regulatory body through the ADGM, who at the time, I don't think many people really knew about it. And they were just really kind of starting out as a regulatory body during that period of time. And they were quite, I would say, aggressive in their approach with great incentives for startups like us. I mean, they've offered us great programs to be able to help facilitate and grow our business. And keep in mind, this is 2020. We're still a very young company at this point in time. So any, I would say, incentives that a regulator can offer us, whether it be discounted fees on visas or discounted insurance coverage for our staff members. I mean, there was a long list of different incentives that they offered. So we opted to go with ADGM. So from a period of 2020 till I want to say 2024, we operated both licenses. And it came to a conclusion. It's like, okay, two regulatory bodies. The majority of our clients and every client post 2020 has been onboarded under ADGM. We have some legacy clients under, the DIFC. And so we just made a judgment call. It's like, well, why are we maintaining two trade licenses when we can just do everything through one? So all we did was we informed our clients who are on our, the DIFC license, hey, we're moving over licenses to this entity here. If you're interested in continuing your relationship, it'll now be under ADGM. You don't have to do anything materially with your accounts. Your accounts are exactly as they are. The investment strategy is exactly the same way. You're with Interactive Brokers, you'll continue. So there's no material changes, but the regulatory body who is accountable to you is now changing from the DIFC to ADGM. And it was just a material change, really, at the end of the day. So we consolidated, made things streamlined, operationally just made things a lot faster for us. But yeah, that's essentially a little bit of background on it.
Right. Now, I want to also ask you about some of the, let's say, options that you guys have in the app. Like you guys added trade, of course, and then cryptocurrencies as well, and the commodities as well. Most of the commodities are available. Crypto currencies are available as well. But there is a need for some people. They might need investing in bonds, which I cannot see in Sarwa right now. And also, I'm not sure if you guys are having this in a roadmap about the stocks from the MENA region. So these things, can you just let me know if it's possible?
Absolutely. So bonds are traditionally not publicly listed. They're OTC, over the counter. So
Okay.
when you go into the bank and you say, I would like to buy, I'm dating myself here back to my banking times, Emirates airline bonds for that matter. You'll never be able to go on a trading platform and find Emirates airline bonds. These are typically sold OTC. There's a trading desk that communicates to another trading desk. Someone is selling and someone is buying. In this case, that would be you. And they would typically be offered in large increments.
Large
so
amount.
most bonds would be typically around the $200,000 mark, and you need to have $200,000 available to be able to buy that bond. Bond ETFs, however, are, you have exposure to the to the bond itself, but through a publicly listed security, which is liquid. And essentially, this asset manager, in this case, it could be Vanguard, it could be Fidelity, it could be BlackRock, has acquired these bonds or is acquiring these bonds en masse for everyone. And essentially, you're able to buy on a fractional basis. So the reason why you don't see direct bonds on the platform, and it is something that we can potentially look at a later stage, but we're also looking about, well, what's the best way for people to democratize access to bonds themselves? But right now, on Sarwa Trade, there's a significant number of bond, I would say, investments you can get into, but they're publicly listed and they're ETFs. So
Okay,
you will
I
find
haven't gone through this actually. I didn't know about that. That bond ETF is available on Sarwa.
on our next call, we're going to discuss.
Perhaps it's because you might have not mentioned this as a separate placeholder for bonds. Maybe you can do that as well, because I
I
was
think
not aware about that.
so. Right now, you essentially on Sarwa Trade, you have access to over 12,000 securities, and I mean, if you just type in bond, you're going to be overwhelmed with a number of different, options that you have. But also, some of these ETF names may not outright say bond. They might say fixed income, for example, or income solution, or income something else. So sometimes you just need to know either the ticker symbol, or it could be just as simple as a Google search and say, what are all the bond ETFs that are available in the US market? And you're going to find a very long list. I mean, nowadays, I think ChatGPT and Gemini and a number of LLMs have become very instrumental in helping individuals discover stocks themselves. But it could be as simple as, I'm looking for income solutions. You literally type it in into your LLM saying, please give me a list of all the different ETFs that are out there that will be able to help me generate income. And you're going to be overwhelmed. There's quite a number. And also from different regions, not just US bonds. You might find emerging market bonds. You might find developed market bonds. You may even find more curated, more specific. If you're looking for a bond for a very specific country, you'll find it in there as well too.
Right, right. And what about the securities from the MENA region or the bonds from the MENA region
On the roadmap.
on the roadmap? Okay,
Yeah,
great.
I'm conscious of not stating a timeline because there's so many factors in developing this out and integration that needs to be done. But I will say that our goal was to have this on the roadmap and delivered by the end of 2020. I'm going to say safe guess by the end of 2026. But
Okay,
our team
okay.
is working, to be able to do that because I mean, why not? I mean, we're from this region. There's a lot of great opportunities within this region to invest in companies that we all know and experience and feel. And it's just a case of just getting the work done for the integration for that to happen.
This is very interesting. So once it comes, then definitely I'll be looking for that, because if you have one, because right now what is happening is the fees are high. Because if you go through investing through the banks here in the UAE, the fee is high, and also it's not intuitive. The GUI for most of the platforms is not that good. So if you have this kind of option built into Sarva, it will definitely help a lot of people.
It'll
There is a,
definitely have our special touch. There's no question about it. We
yeah.
want to make the investment easy. It'll have our special touch. There's no question.
Yeah, yeah. Now, as you've got many things on server that I have already tested and worked on, but the only thing I think that I haven't touched upon is the options, and I haven't talked about this on my channel as well, because I didn't understand that. So I need you first to let me know myself that what exactly is this thing, options, because I have gone through leverage trading, which I miserably failed, and I don't recommend anyone as well who doesn't understand what exactly they're doing. But I think options is a bit different, and people should know what exactly it is. And the disclaimer is that you don't have to go and do options trading. It's just that I want to understand myself, and also you need to be educated about whatever it is.
No, absolutely. And options trading, is I would say, is more of a recent tool to help you grow your wealth. I want to say circa a year or so that it's been added on the menu itself. And what we've seen is steady growth. I would say more stable, predictable growth in adoption since the time that it started. But over the last couple of months, we've just seen a skyrocketing interest. And along with that skyrocketing interest, and what I mean by interest is people actually using options, there's also been a number of queries that have been coming in to Sarwa to say, hey, look, this seems really interesting. Can you just give me a little bit more guidance, give me a little bit more oversight? How does it work? Just more, FAQ questions relating to it. And since you're with us, you probably would have seen some of our content adjust to cater to that, where we launched a Options Academy on our YouTube page. You're seeing a lot more emailers going out. But again, with our flavor of trying to break it down into its simplest form to help you understand. And I wrote an article on it, and I appreciated you making a comment on this as well to Wali about options, because it was a journey for me where, as I mentioned, I'm not an active day-to-day trader. I'm more of a passive investor over the long term. I'm familiar with options, but as far as practice, it's something that I have to kind of pause and think about, in my head to go step by step to be able to better explain it. But essentially, what is options trading? In traditional trading, you are putting up your capital and making a decision to buy that stock. And suppose, let's just say in this case, you have $10,000 at your disposal. This is your buying power. And you make a decision to buy Apple stock. You are committing to buy that Apple stock and you're executing it and you own those securities. They're yours to own. And that means that the success, or I would say, downfall of your portfolio is very much dependent on how that Apple stock performs. Where options work a little bit different, where when you exercise an options contract, you have the right, but not the obligation to buy that stock. Take a step back just for a second. So you could actually enter into a financial contract to state that I have the right to buy this particular stock at a future date at a preset price, but I don't have the obligation if it doesn't reach that specified criteria or that specified price. So you could, for example, and I'm going to give you an example of a call option, which is a very popular, I would say, strategy of many different strategies, that you can state that Apple today, I'm just going to throw an even number, assume Apple today is $200. And you have a belief that, a very bullish belief, that Apple may go to $230 maybe in the next, 3 weeks. Because, the earnings are about to release, you've got some intel, you have some colleagues who work at Apple, and you have a very strong feeling that it's going to go to $230 per share. But not strong enough that you want to actually risk your capital, your $10,000 that you have, to buy it at $200 in hopes that it goes to $230. What you can do is buy an options contract for a long call. And what that means is you would essentially buy an options contract for, let's just say, $220. Maybe, let's say $220. That if it reaches $220, I have the right to be able to buy it at $220. If the Apple contract if the Apple share price does actually reach $230 by that specific strike date, and the strike price basically reaches $230, and you have the ability to buy it for $220, technically you can buy it for $220, even though the market price is $230, and sell it instantly for a $10 per share profit. You don't have to. Also, this is a key thing. You have the right, but not the obligation. But you have also the ability to sell the contract if you don't have the capital and say, you know what, I just want the profit, the difference between the two, less what the cost is for me to be able to buy this options contract. So essentially, it's a way for you to be able to speculate without risking your capital itself. And your maximum exposure could be, in this case, just the cost of the options contract, inclusive of the premium that you pay.
So let's say if I simplify it, and I would say, let's say if there is a stock which is currently at $100, and I would think that it will go to $110 in 1 month time. So I would be buying that $100 stock. Its option, I would be buying its option to buy at $100, and then I would have the option to sell it at $110, right? This is what is going to happen.
Well, in this example, so if we say 100 and 110, so let's use a little bigger buffer just to make it easier for the numbers. So currently the price of the stock is $100 per share. You think you're bullish. You think its stock is going to go up to 120 in the next 2 weeks.
Okay.
You could buy an options contract for, let's just say, 115. And that means that you have the right to be able to buy that stock at $115 per share. Why that's interesting is because if the price of the stock actually reaches 120, there's a little bit of an arbitrage here. I can buy this stock at 115. I have an options contract that I've paid for, that I've entered into, that gives me the right to buy it at 115, but the market prices are 120 for that stock itself. So I'm essentially in a position of profit here, that either A, I can decide to just go ahead and buy the stock at 115 and I could hold on to it and I get an instant percentage bump up, on my return investment, because I bought it at 115, but the market price is 120. My portfolio looks amazing because I bought the stock at 115 because my unit cost is lower. Or you can just say, you know what, I don't want to necessarily buy the stock itself. I just want to be able to sell my options contract and pocket the difference between 120 and 115. This is essentially what options trading allows you to do, is that it enables you to speculate without committing to buying the stock. You have the ability to buy the stock if you want to, if you have the buying power, if you have the capital, or you can just sell the options contract for the difference, which is essentially what your profit is.
So what is the fee involved, let's say, and what is the minimum amount of investment that I have to do? Let's say, I'm sure that it will not be 1 or 2 stocks. I have to buy some lot kind of thing.
Well, no. So the funny thing is, so when you buy one options contract, it gives you the ability to command 100 shares of that respective stock. So if you're buying at $200, per share, and you're buying 100 of them, that's already $20,000 of purchasing power that it gives you the ability to command at that point in time. So just by virtue of that, you're already kind of getting a leveraged exposure to a greater number of shares. Now, if you talk about minimum investment amount, the minimum investment amount on Sarwa Trader off the bat is $500, really, at the end of the day. So that's their starting point to enter into any options contract. Fees. So fees are a component of two things. There's the fee that you pay to enter into the options contract through the broker. So in this case, Sarwa, right? So we charge a fee. And the fee that we charge is $4 per contract. So for you to be able to command 100 shares through an options contract, you pay a flat fee of $4. But there's also a secondary fee, which is called a premium, which is essentially like you are paying a cost for this security of not having to be obligated to buy this stock. When you are entering into a options contract, you will know upfront what is the cost for me to enter into this options contract outside of what the broker may charge me themselves. So in this case, it could be $1 per share, it could be $2 per share, and that's where it becomes an exercise on numbers to say, okay, well, if I'm going to make this much profit from this trade, but what were my costs? What was my cost to the Sarwa? What was the premium that I paid? And it becomes a net exercise to say, I'm still ahead. So you may make $2,000 on the options contract, but then you have to also then subtract what was the premium that I paid and what was the cost that I paid to Sarwa itself.
So typical the cost of premium can be, let's say, $2 per share or $3 per share, and you're buying a lot for 100 shares. So it would be $200 or $300, whatever the amount is, as a premium. And then on top of that, it's $4 cost from Sarva. So let's say if I have, then in that case, if even, let's say, $2 volatility in the stock, if it's going up $2, it can give me let's say $10. So $10 will give me for 100 shares. It can give me $1,000 of profit in case I sell it, and then I have to minus or subtract the fee and the premium. So I can
Correct.
easily pocket around $600 or $700. Is it the ballpark
That's the idea.
number?
That's the idea.
Okay.
That's the idea. And
Okay.
look, the premium would range depending on a number of different factors. It's about the level of volatility. So there's this, whenever you're buying an options contract, you're going to see this page, which is called the Greeks. And the Greeks is a way of analyzing the volatility and the impact on the premium for each and every stock. And there's four criteria essentially which assesses what is the volatility for the stock, and that will determine what the premium that you will be paying for the stock. So yes, it can be a very easy exercise of $2 per share, but sometimes it could be different at that time as well. So it could be lower, it could be higher.
Right. I got it. Now, if because earlier, before we spoke about this options, I was under the impression that it's almost the same as trading on leverage. Although when I was having a look on this and having a detailed analysis on this, it's much safer, I would say, than leverage. Although both of them are kind of speculative, but still on leverage, there is a big stake from your side and all capital can be lost. While here your risks are minimized in terms of, let's say, your upward, you are downward protected, and upward your let's say profits are in a better way. You can have much better profits with downward protection.
It is very much outsized returns, but you also have the peace of mind and security of that your maximum loss for most options trading strategies would essentially just be the premium that you paid. And I think that's a very clear distinction between something just as like CFDs, where there's an element of leverage where you can lose everything really at the end of the day. But when you enter into this example that we gave of the options contract for Apple, at that point it's like, well, I know that if my thesis did not come through, if my thesis was not correct, well, my maximum exposure is just the cost that I've incurred at that point in time. Because the stock does not necessarily land on the strike price that I wanted it to be at that point. So yeah, it's a very different. And to add to that, there's no leverage on our options trading here at Sarwa itself, so it doesn't maximize nor does it amplify losses in this case as well. So your premium is essentially what your max cost would be.
All right. Okay. Great. And anything towards the end, if you want to say something about the situation, about the let's say you, because the thing is now the market, as we are talking, it's already all time high. Although the situation, the oil is also on all time high. The gold should have been all time high, but it was down. And similarly, let's say the war situation has not subsided. Still, the market is up. If it was for something else, I would have been asking you that what would you say to console the investors. But here it's everything is on steroid. But anyways, do you have something to say right now? Because
I
right now
do.
even I can see anything can happen.
I would encourage the viewers to go to Google and just for fun type in S&P 500. Okay, just for and go to the max view where you can see it as far back as you can. Pick any date in time in that timeline itself. At any point in time, individuals would have asked the same question or stated the same thing. It's at an all-time high. Why should I invest? Go a little bit further back. It's at an all-time high. Why should I invest? Keep going. And the same conversations that I've had over the last 20 plus years in financial services, I have heard them repeatedly, is it's at an all-time high. It's designed to be at an all-time high. The objective, the goal for everybody on Wall Street and every, I would say, exchange around the world is to generate value, generate wealth. It's very much in line with every company's, ethos of trying to create shareholder value. It's meant to do that. What it is not is a straight line. There will be volatility along the way. But what time has shown, Wali, is that the earlier you start, the better off you will be. The stock market is a very fickle, I would say, entity itself, where up is down, down is up. And in the short term, it's very difficult to kind of predict what the direction is going to be. On paper, you and I will sit here together today and say, look, 2 months ago, when this whole situation in the region started out, are we really that much further away from where we started off? No, oil is at a premium. The situation is subsiding, but not quite where it needs to be. There is secondary impact to having oil at a high price. So this should theoretically impact the stock market. But yet the stock market, champions onwards.
Yeah.
The idea
Yeah.
is think long term. Don't think in short stints. I am a big advocate of diversification. It has done me well. It has done investors well over the years. It's something that you learn in school, and then when you see it in practice, the proof is in the pudding itself. But diversification is everything. And what is your goal? Work towards your goal. Don't worry about the day-to-day tactical changes that may happen in the market. Your portfolio will absorb this, and it will reach new heights over the long term.
I was watching one of the videos from Nawal Ravikant, and what he was saying is don't pay. I mean, money is not something that you have the most precious. The most precious thing is your attention. So if you're looking into day-to-day breaking news, you will be losing a lot of incentive to work, or let's say to improve your life. So money is not something that is actually precious to you. The attention should be precious, and that should not be wasted at all, which is happening right now. I mean, myself, I've been all the time on X platform during this whole uncertain period, and I was wasting my time. And I knew that I'm wasting my time, but because, things are happening, you need to be like this. But you cannot be like this for all the time. So in regular days, if somebody is still glued to the news, they are doing themselves a big disservice, I would say.
Yeah.
So, anyways, nice to have you here, and I hope we can have similar kind of conversation later on as well. It was really insightful, and you cleared a lot of misconceptions that I had, especially for the options. So, thanks for that.
Pleasure is all mine, Wali. And look, we're, as I said, we've got a lot of material on our YouTube, and we're sharing material with all of our clients. And look, it's a journey. And it's not to say that this is something that everyone must do. It's not exactly the position for that. And I will tell you that, a smaller percentage of our client base do use it. But for those who are comfortable with the dynamics of options trading and they can see the value that it offers them, we welcome you to give it a try and reach out to us if there's anything that we can help with.
All right. Thank you very much.
Pleasure is all mine, Wali. Have a wonderful day.